So, what's happening? Today, we're going to talk about mortgages, specifically mine. About 3 years ago, I posted what was, until just this month, my most popular YouTube video ever. And the topic of that video was 4 reasons why you should pay off your mortgage before you hit 50 years of age. And I was able to do that last year. Unfortunately, once I had paid off the mortgage, I then turned around the next month and took out another one, and it was going to last until I was just over 77 years old. And I thought about that, and I had no desire to wait until I was 77 years old to be debt free. I decided that I wanted to start paying the mortgage a little bit earlier. And the topic of this video is to show how much progress I've made over that time, and to show you how just a little bit of extra payment over a relatively short period of time can cut off quite a bit from your mortgage, especially if you make those payments early on in the loan. So if that sounds like something that'd be interesting to you, be sure to stay tuned. So when I moved, I had to move about 1,200 miles from where I was living, and the area to which I was moving, this was last year when the market was really tight and rates were just starting to inch up. But anyway, the market was very tight, few houses on the market, so I wound up paying a little bit more than I wanted to. Now, those of you who are living on the coasts, you'd probably laugh at what my house payment is. But anyway, it was more than I had anticipated, and it was more than I had paid on my previous 2 houses that I'd bought. By way of full disclosure, I took out a loan for $150,000 over a 30-year term. My mortgage interest rate was 5.125%, which I consider myself very fortunate, because at the time, the rates had gone up from about 3.5% early in 2022. And then during the summer, they hit about 6.5. And then right about the time I was ready to lock in the rate, they went back down to about 5.5, 5, somewhere in there. And I was able to lock 5.125%, which I've considered, pretty fortunate, because now rates are up in the 7% range. So this is the total mortgage amortization schedule page, and it allows you to add extra payments and see how that will affect your mortgage. But anyway, I took those out. I just want to show you what the loan terms that I have would be. It leads to a monthly payment of $816.73. That's just the principal and interest part. The taxes and insurance are in addition to that. They're in an escrow. The total interest, okay, I took out a $150,000 loan at what's now a relatively low rate, but the interest that I'm going to pay, if I just pay the minimum every month for the next 30 years, that will be $144,022.96, effectively doubling the price of the house. And half of it goes to equity for me, half of it goes to enriching the bank. So I'm on my bank's loan account page, and this reflects my loan. You'll note there are no identifying markings that tie it directly to me, so you don't know my personal information other than some of the payments that I have made. The loan started last year in September, and it's supposed to end in October 2052, except it's not now, because I've paid extra. I've paid $3,007.69 over that period of time, and it's varied by the month. I did set it up to round up to the next nearest $100, and that means I was paying $2.94 extra per month, and then extra side money I was making through some online apps like Ibotta and some freelance writing I was doing. Anything that came in through those side hustle kind of gig ideas, I was putting that toward the mortgage. And as we can see from this other page, I have paid off 15 months. And that's right there in the middle there where it says fewer payments. Now, instead of paying off the loan in October of 2052, I'll now pay it off in July of 2051. So I have cut off, through those 15 fewer payments, more than $12,000 of interest and payments at the end of the loan. And if I had made the same extra mortgage payment at the end of the loan, I would have cut off about 3 or 4 months is all. So I am really happy that I've been able to save that money by paying ahead early. So some of you might be thinking, what if you took that $3,000 and put it into an investment account and let it grow for the next 29 years? Would it be worth more at that point? And the answer to that is quite possibly. However, it's not a sure thing. By putting it toward the mortgage, I know what the return is. I have saved $12,000 in interest payments. And at the end of the loan, if I'm still making as much money, I could then invest the $12,000 that would have gone to the mortgage that year and actually increase my investments and savings at that point. My goal as a stretch is to pay off the house in 10.2 years because Dave Ramsey's study of millionaires found that the average millionaire had paid off their house in 10.2 years. That may or may not be possible. Probably not at the rate I'm going right now, but who knows what will happen in the future. Regardless, I would like to pay it off earlier rather than later because having this payment, this mortgage into retirement is probably not as conducive to a very, very relaxed retirement as not having a mortgage would be. So, if you'd like periodic updates as to how the mortgage payoff process is going, be sure to let me know in the comments below. If you've paid off your house early, let me know. If you haven't enjoyed being paid off and not having a mortgage out there, if you regret it, let me know. If you enjoyed the video, if you've learned something from it, showing how early prepayments can make a big dent into a mortgage, be sure to hit that like button. You can just tap it really, really lightly until it turns, and that will help the channel out a lot with the YouTube algorithm. Also, subscribe if you've not already done so, and be sure to hit the notification bell. I thank you so much for watching if you stay to the end, and have a great day.